This is going to be a video on why you commonly get stopped out of the move before it actually makes the move that you want, and a few ways to fix this. Hey guys, putting together this video on a lot of times why you get stopped out before the move, only for you to get stopped out and then see it retrace. I got a few DMs on Instagram to make this video on stop losses. Where do you put your stop loss? Why do you keep getting stopped out? And really wanted to break down a few of the reasons why you get stopped out and then going into examples, and we can use SPY today or whatever works. So let's get right into it here. Let's go to reason number one. This is the main one that a lot of people do, and one of the main ones that you'll see is you set your stop loss at the exact cent of the support region. So what I mean by this is, let's say you identified a support on Apple at 165. If it hits 164.99, you're selling because you think the support has broken. And that's simply not the case. They're not to the exact cent. They are areas, not levels. So again, like I just stated, support and resistances aren't at a specific price. Instead, they're an area on the chart. So for Apple, it may be from 165 to 164.80. Just because it breaks below it, 165 by a cent, does not mean the support is broken. You will very rarely see a stock hold a support to the exact cent. And in fact, I'd almost say with certainty it will not hold it to the exact cent. Obviously, there's exceptions. There's a few times that it will happen, but more times than not, it will not just be to that exact cent. The example would be a support zone versus just a level. You want to set a zone or an area to watch on the move versus just a level. You can use just a level, but you have to understand you have to give it some wiggle room, in that if it breaks above by a little bit, doesn't mean that it's going to break out. A lot of times it could retrace. What you want to do is watch what it does above that level. Like pointed to right here, watching the price action volume below that level if it does break. So, for example, if you're looking at a support region and you break below that support, what does the price do below, or how does the stock respond to below that price? Does volume pick up? Does price action hold? What are the buyers and sellers doing at that particular price? Reason number two. So, summary, reason number one, a lot of times you're setting your stop loss at a level instead of a zone, causing you to get stopped out prematurely because you don't have enough of that zone. It's just at a particular level. Another one that's really big is you're setting your stop loss at obvious levels that get shaken out. This is a very, very common one, and a lot of times people set their stop loss at the high of day, low of day, psychological level, whole number, like on SPY, 414, 415, 410, 405, 390, whatever it may be. And even half numbers. So like things on like Apple, for example, 167.50, 168. Why do these levels get shaken out? Well, they're clear areas that provide the most liquidity. So if you think of this from being an institution and you have, for example, a million shares or a few million shares to offload, do you think there's going to be enough liquidity at 165.32 to where you don't alter the price and get a worse slippage on that particular sale or order? Obviously not. But they know at the high of day, the low of day, all these massive levels, they can offload millions of shares here and not affect or have any slippage on the price because there's so many people interested in the equity at that point. These easy to watch areas are very common to get shaken out. So like if Apple's at 165 and it goes to 164.80, stops out all of those people and then reclaims back into that area. So you have to make sure you're setting it at a level that fits your strategy, but don't set it at a level so obvious that you're going to get shaken out. Reason number three, and this is something that sometimes happens, it is a part of it, is you hesitate on the initial entry, causing a bad entry where you in turn then have to put your stop very close to giving the trade to not giving the trade much wiggle room. So let's say you're watching something come into a support, all of a sudden it rejects, or it holds and you hesitate and you're wondering, waiting for added confirmation, you don't get it, and then you enter, well, now you've already missed a lot of the move. Now you have to adjust your stop to be so close that it doesn't give it much wiggle room, whereas if you got in when you felt that hesitation, when you should have entered, you would have been in a profitable trade. Very common on the 1 minute chart. Just because the 1 minute candles can vary drastically, it's hard to get a full read on it. It can happen so quick, and unless you have a lot of experience reading it, oftentimes you will feel that hesitation. You will feel yourself entering late. A big thing to help with this is when you feel the hesitation and wait on confirmation, it is already too late a lot of times and your R is skewed. When you feel that, when you wait on more confirmation, this is something to note, there never really is confirmation within a trade. It could be a confirmation of your trade rules and stuff, but there's always uncertainty, and you have to deal with that uncertainty, whether it be the fear of the unknown, fear of the loss, whatever it may be. You have to be able to deal with that. So waiting on more confirmation a lot of times isn't actually what is going to happen. So let's go in here, and then let's go into here, right here, and let's go into SPY. Let's do an example here on SPY. And you can really do this from whatever time frame you want. If you wanted to start from the daily chart, if you wanted to start from the weekly chart, if you wanted to start at the 5 minute, whatever it may be. Let's just go in here into, let's just say, the 5 minute and just find a random support region. First one I see is this support candle right here. This is what's common, okay? A lot of people will say, oh, okay, well, it's a 411.89. We bounced at 411.89. I'm buying it here off of this, and I'm going to set my stop loss right below 411.89 because it has to hold 411.89. Well, what exactly happens? Exactly this. It ends up barely breaking. So you would have got stopped out here. If you entered again on the reclaim, you would have got stopped out here, and then it moved all the way up here. So again, set it as a region. This would help you give it some wiggle room. So let's say we wanted to set it at this level up here from this pre-market area all the way down to here. And really, the one thing that you have to note is your zone or your support zone really depends on what your target is. So if you had a zone from 11.76 to 4.12, hypothetically 25 cents, and your reward or your target was only 10 cents to the upside, that's not a good zone. But if you had a 25-cent zone for $1 of risk, well, then that's a good support zone to eye because that could give you a 4-to-1 R. So again, this is common. So many people will just set their stop loss here, get shaken out, and then question what exactly happened in this move because it gets shaken out here. You'd stop out here, all of a sudden it reclaims, and then it makes the run that you are watching. So again, the biggest thing you have to be careful of, or something to note, is make it a support or resistance region. Give it some wiggle room, and it's not going to be the exact test of the scent of that particular region. With that being said, that wraps up this video. If you did enjoy this video, if you could give it a thumbs up and subscribe, it would be appreciated. If you have any questions or need any help, feel free to leave them in the comments below. I would love to assist you guys and help you out. Hope you guys enjoy. Thank you.